Junk silver's not. It's not. It's dimes, quarters, and half dollars minted prior to 65. But where I say it's the best value, if you can do anything at or near spot, which junk silver is, or maybe a little over, but not much, you're buying something that is the best value with no opportunity cost, with no added premium attached. And you put that in reference or measure it against where it's been in the past. During the pandemic, because of its utility and its divisibility, the premiums were second only to American Eagles. And the U.S. Mint has been the model of inefficiency for a long time. And, I asked people to listen to Vic Swear's interview with, what's Jack's last name? I forgot Jack's last name. It'll come to me in a moment. But Jack Sermon developed the Silver Eagle program at the U.S. Mint, and Bix did a 3-part interview with him a couple of years ago. I remember almost falling off my chair, where he said he was approached by, at the time, his boss, which would have been the Secretary of Treasury, Janet Yellen, who told him to make as few Silver Eagles as possible without creating a global backlash. I mean, he actually said that the primary distributors came to him with far more demand than they could fill. Like they wanted another 36 million and they gave him 12. And he said it really bothered him. So, there's a fine line between conspiracy and reality with the U.S. Mint. I would prefer Silver Eagles all day long, with many of these states looking at silver coins made in the U.S. as legal tender. But the premiums on Silver Eagles, on gold buffaloes, are crazy right now. And moving in that direction again, the fact that junk silver hasn't followed it the way that it did during the pandemic is testament to the fact that things aren't breaking apart for everyone to notice. This is just those who follow the U.S. Mint and their lack of capacity. But if I were going to say what is normally, I would say bars. But due to the threats all along this year of tariffs, the bar industry, or the products that are associated with silver bars, they're coming largely from Switzerland, and with Pam Swiss and Valcambi and others, they weren't imported very much. And so the premiums are higher on them than I like. Maybe 1 ounce rounds, those come from domestic refiners here, would be the next best. Or maybe even there are some coins like the 2026 Silver Kangaroo that we have in stock, or some of the other coins that are not American Eagles, but are of the other 6 major mints, the Krugerrands, the Britannias, the Philharmonics. They're right there. And because the bar market is inflated, I skip it. So it would either be junk silver, 1 ounce rounds, or coins from probably not even the Maple Leaf, which is getting inflated again. It would be South Africa, Australia, UK. To me, would probably be the 3 that would stick out as being a good value right now.
What impact does China restricting exports of silver mean for us and the LBMA?
Well, I think it means a lot for the LBMA. It because of this, and because the move to classify silver as a resource of national interest, that's China. And then you add the U.S. putting it on the critical mineral list, which means they too can curtail exports. The president can do it without congressional order. And then you look at the essential role of silver in solar panels, electric vehicles, semiconductors, defense, you name it. I think what it does is it shows that both countries are viewing silver as a strategic asset. It's not a commodity anymore. You're looking at a potential supply crisis and rising strategic value. What starts out as a trickle turns into much more than that. And, the people watching this show and listening to others in the industry who talk about this are way ahead of the curve and think, well, geez, everyone knows this. But walk outside your bubble and talk to anyone who's well-read, reading the wrong stuff, mind you, they won't have any idea about any of this. And so we're a ways away from that moment where it turns into a stampede. But it will curtail, I believe, supply. And in a market like silver that is so massively rehypothecated at the upper levels, meaning the same contract is sold over and over and over and over again, creating a real problem. Remember, the market cap of silver is the size of a pinhead, and you throw a bunch of money at it, and it doesn't just go up, it explodes higher. This is what they've been trying to hold back. And I think that the big money across the globe understands this. I think they understand that this is a rush to a quiet rush to accumulate the resources. And I think they know that that if they don't do this, they being all of the governments, and really work hard at protecting their own supply chains and their own strategic stockpiles, silver is a necessary element. It's necessary in moving energy. It's necessary in moving civilizations. As dramatic as that sounds, there is no element on the planet that conducts heat and electricity better than silver. People say copper. Copper's too slow. Copper's going up too. It's reclassified. But silver is a needed element. It is critical. And I think it will start to affect the supply chain. I think people take for granted for far too long how easy it is to get silver. I talk to people all around the world who have a next to impossible time of getting it all around the world. I get emails every day saying it's impossible to find silver, impossible to find silver. So it's been something we've taken for granted here in the U.S. I could see that rapidly changing if all of the governments start to say, hey, we better get into a protectionism type of mode and not sell this to the United States and to North America. Let's take care of our own first. And you could argue that's what the U.S. is doing right now.
People ask me all the time, what's the best value in silver right now? And I always give the same answer. Junk silver. That's the dimes, quarters, and half dollars minted prior to 1965. It's not junk in the literal sense. There's nothing junky about it. In fact, it's some of the most historically useful, versatile, and liquid silver you can buy. The reason I say it's the best value is simple. You're buying real silver coins, recognizable worldwide, at or near spot. There's no crazy premium, no collector fluff, no opportunity cost. You're just getting silver, pure and simple. If you think back to the pandemic, the premiums on junk silver went through the roof. Why? Because people recognized its utility and divisibility. When things get shaky, people don't necessarily want 100-ounce bars sitting in a vault. They want silver they can use, trade, or barter with. During those crazy days, premiums on junk silver were second only to American Silver Eagles. But now, strangely enough, junk silver hasn't followed those premiums up this time around. That tells me we're still early. Things haven't yet broken apart for everyone to notice. Those of us who follow the mint and understand what's happening behind the scenes see it, but the mainstream hasn't caught up yet. Now let's talk about the U.S. Mint, because that's a story that borders on absurd. The U.S. Mint has been a model of inefficiency for years, and if you really want to understand why, I recommend listening to Bix Weir's interview with Jack Sermon, the man who helped develop the Silver Eagle program. I remember listening to that interview and nearly falling out of my chair when Jack said he was approached by then Treasury Secretary Janet Yellen, who told him to make as few Silver Eagles as possible without creating a global backlash. Just think about that for a second. The person running the U.S. Treasury told the Mint to limit the production of the most popular silver coin in the world. Even when the authorized distributors were begging for more, Jack said they wanted another 36 million coins, and the Mint only produced 12 million. That's not inefficiency. That's intentional throttling. He admitted it bothered him deeply. Now, I'm not saying there's some shadowy conspiracy, but there's a fine line between incompetence and control, and the Mint has been dancing on it for years. If it were up to me, I'd take Silver Eagles all day long, especially with so many U.S. states recognizing American minted silver coins as legal tender. They're iconic, beautifully struck, and instantly recognizable. But here's the problem. The premiums are out of control. Silver Eagles, gold buffaloes, they're getting crazy again, just like they were during the pandemic. So while I'd prefer Eagles, I can't in good conscience tell people to pay 60 to 80% premiums. That's not value. That's why junk silver stands out. It's still trading close to spot, maybe a small premium, but nothing painful. You're getting real, divisible silver, no nonsense attached. And when you compare it to where it's been historically, it's a bargain. During past crises, junk silver commanded massive premiums because everyone suddenly wanted it. Right now it's quiet, but that calm won't last. Now, under normal circumstances, I'd also recommend bars. They're straightforward, simple, and efficient, especially 10-ounce or 100-ounce bars. But this year, the bar market has been distorted by the same thing distorting almost every other supply chain: geopolitics, and tariffs. Many of the most trusted refiners, Pamp Suisse, Valcambi, Argor Heraeus, are based in Switzerland, and their products have faced import disruptions. Premiums on those bars are now much higher than I like to see. So if bars are inflated, where does that leave us? The next best choice is 1-ounce rounds from domestic refiners. They're easy to store, easy to trade, and the premiums are reasonable. After that, I look at sovereign minted coins from trusted mints other than the US. The Silver Kangaroo from Australia, the Britannia from the UK, the Krugerrand from South Africa, the Philharmonic from Austria. These are all excellent options, and their premiums haven't gone wild yet. Even the Canadian maple leaf is starting to inflate again, so I'd lean toward those other three.
It's important to remember that even with the sharp correction we saw, silver is still up between 65 and 70% this year. And I mean, I don't know how many assets rank higher than that. But when you have any asset that appreciates in a parabolic manner 40% in 2 months, a correction is inevitable. This is what overbought is. And, you know, it shouldn't come as a surprise to people. And I think that certainly is something that's hard to rationalize for us gold and silver bugs, because we've waited so long and feel that the market should have done this a long time ago, gotten to these levels. But suffice it to say, this is a very high stakes game where some of the biggest institutions on the planet got caught very much offside and were, you know, actually looking at what could ultimately be a existential threat to their survival. And so they did an awful lot to slow down the rise. But here we are again, back up over $1 plus and back up over 50. And maybe it's because silver is now a critical mineral. We've been talking about that for a long time now. Now it's official. Maybe it's the realization that it's irreplaceable, that it's the most conductive element known to science, the lifeblood of energy and data and power itself. Who knows? But the bottom line is that with the U.S. government calling it a strategic mineral, they've put a floor under the price, and they will, I think, start to purchase it. At the same time, you have the Chinese Ministry of Commerce. Their name is, the acronym is MOFCOM, Chinese Ministry of Commerce, has new rules regarding the state-traded exports of a few different commodities, including silver. So they are doing the same thing. They aim to step up, if you will, the protection of resources, and that means curtailing exports in 2026. When you realize that the largest refiner of silver in the world, China, is restricting exports and has announced starting in 2026, all silver exports will require individual government licenses from Beijing. To me, this move classifies silver as a resource of national interest, not just to the United States, but signaling a strategic shift towards state-managed supply, including places like China. It's a big deal. It's a very, very big deal. And I think the bottom line is silver is being redefined from an industrial metal into a geopolitical resource, or into a strategic element, not just in the United States.
How does that change the game for major dealers like Miles Franklin, or smaller dealers at the local level?
It will consolidate into more major dealers, or those smaller dealers would consolidate, in my opinion, because the cost of maintaining an inventory is becoming exponentially more expensive. And with that, you have insurance and shipping and all of the things involved. It's expensive. It's much more expensive than it was. To hedge a position at higher levels, you know, takes away some of that risk. But most of the smaller coin companies or you know, local coin shops don't hedge their exposure. So, you know, it's a big deal. You have a large inventory of silver, and the volatility that we've seen where it can fall, you know, 15, 20% in a short period of time. That's enough to really scare a lot of these coin shops out of business.
Let's talk about what happens when supply tightens in a market as small as silver. Most people don't realize this, but the entire global above-ground silver market, everything available for investment, is worth less than one major tech stock. The total market capitalization of silver is about the size of a pinhead compared to global capital markets. Throw a few $1 billion of institutional money at it, and the price doesn't just go up, it explodes. That's what the big money understands. That's why central banks and sovereign funds are quietly accumulating real assets: gold, commodities, strategic metals. They know the paper game is reaching its end. And silver, with its tiny float and dual role as both a monetary and industrial metal, is one of the most asymmetric opportunities on the planet. Right now, we're seeing the early stages of a quiet rush by governments to secure supply chains. China has made the first move, restricting exports and classifying silver as strategically vital. The US will follow, because it has to. If China hoards silver to feed its solar and electronics industries, the West will face a supply crisis. Remember, the US imports nearly half the silver it consumes. 43% of all silver used domestically comes from abroad. That's not a small vulnerability. That's a national security risk. And when both major powers view the same metal as strategic, the rest of the world takes notice. We've already seen hints of this protectionist trend. Look at the Inflation Reduction Act and the CHIPS Act, massive government investments designed to onshore supply chains for semiconductors, batteries, and renewable energy. Silver fits squarely into that framework. If the US formally adds it to the critical minerals list, it opens the door for everything from government stockpiling to export restrictions to tax incentives for domestic production. And once silver becomes a protected resource, the global flow of metal changes dramatically. Suddenly, silver that once moved freely through the LBMA system in London or through COMEX warehouses in New York might get trapped within national borders. That's when paper markets start to break. You see, the LBMA and COMEX are built on rehypothecation, selling the same ounces of silver over and over again on paper. It's like musical chairs with 1,000 traders and 100 chairs. Everyone thinks they have a seat until the music stops. If you want to see what that looks like, imagine a rush of industrial users and ETFs all demanding physical delivery at once. While China restricts exports and the US begins stockpiling, the contracts would pile up and the physical bars simply wouldn't exist to cover them. That's the kind of silver squeeze that can't be meme-driven or faked on Reddit. It would be a geopolitical short squeeze of historic proportions. And make no mistake, the big institutions know this. They're just not talking about it publicly. They're repositioning quietly, buying time before the revaluation hits. Meanwhile, most people are still asleep. Go ask the average person on the street what they think about silver, and they'll shrug. Maybe they'll mention jewelry. They have no idea it's the backbone of the green economy, or that the world is running a consistent 150 million ounce annual deficit. That's why I say, when this awareness hits the mainstream, it won't be a gradual move, it'll be a stampede. You'll see panic buying, shortages, and premiums that make 2020 look tame. Even today, I get emails daily from people around the world saying, "Andy, it's impossible to find silver in my country." Whether it's Australia, the UK, or parts of Asia, the supply is drying up at the retail level we've taken for granted here in the US, that you can just pick up the phone and order 1,000 ounces of silver for delivery in a few days. That assumption is fragile. If governments start prioritizing their own industries, saying, "Let's keep this metal domestic," that convenience disappears overnight. We could easily see a world where governments become the primary competitors for silver. Think about that. You're not just bidding against other investors anymore. You're bidding against entire nations, trying to secure their energy infrastructure. At that point, silver becomes what it truly is. Not a commodity, but a strategic resource. So what's the smart play before we get there? In my view, it's simple. Accumulate physical silver while it's still available and affordable. Focus on liquidity and recognizability. Junk silver, 1-ounce rounds, and sovereign coins. Those are the forms that will hold the tightest premiums and the strongest resale value when the rush begins. And for those who prefer larger positions, stick to 10-ounce or 100-ounce bars, but only if the premiums make sense. Avoid the hype, avoid the exotic stuff. Keep it simple and liquid. As for storage, if you hold your metal in third-party vaults, make sure it's fully allocated. Allocated means it's legally yours, segregated from the custodian's assets, not part of some shared pool. Unallocated or pooled silver is just another IOU, and we've seen how that story ends. You see, what's happening right now is the slow-motion death of paper promises governments, institutions, and individuals are all rediscovering the same truth. If you don't hold it, you don't own it. The world is shifting from trust to tangibility. When you connect all these dots, the supply deficits, the geopolitical restrictions, the surge in industrial demand, and the systemic leverage in the paper markets, you start to see why I keep saying silver is the most undervalued asset on Earth. It's not just about price, it's about awareness. When the market wakes up, the repricing will be violent, and it will happen far faster than anyone expects. And don't think gold will escape this dynamic. It's part of the same story. But silver, because of its smaller market size, will move first and move faster. It's the more volatile sibling, and when it runs, it really runs. There's an old saying, gold is the money of kings, silver is the money of gentlemen, barter is the money of peasants, and debt is the money of slaves. Right now, the world is drowning in the last one, debt. And when debt systems fail, people always return to the first two. That's why I believe junk silver, of all things, will have its renaissance. It's the most democratic form of real money, small, divisible, universally recognized. It's silver for the people, not the institutions. And it will be the bridge between the old monetary system and the new one that's emerging. So when people ask me, Andy, what's the best buy right now? I tell them the same thing every time. Buy what's undervalued, buy what's disappearing, and buy what governments are starting to call critical. That's silver, not tomorrow, not next quarter, now. Because when the stampede begins, the door won't stay open for long.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.